recording starts now. Thanks a lot, Katerina. Welcome, everybody. Welcome to my webinar. Broadcasting live from Mexico City. This is me, myself, Alberto Alvarado. This is my free YouTube channel. You type this in the search box in YouTube. This shows up. You click subscribe. And today is the first day of March 2017. So yeah, it's official, guys and girls. We're just about to start this new month of the year. And allow me a second, because guess what? I believe that this thing is about to crash again. Okay, well, hopefully not. Let me start taking some snapshots for the for today's session. We have a tremendously interesting scenario that happened yesterday. This is it. Sorry about that, but I have my throat is soaring. I don't know if I'm going to get sick or something. Let me grab our and the daily. Weekly. Okay, we're ready to start. Well, I don't know if you remember that we were talking about yesterday a potential situation that could be happening in dollar-yen. And wait a second, please. This thing is overheating. Let me see if closing something, it fixes itself. If for some reason I crash, I'll be back soon. I believe it was not necessary to close to force the shutdown of my computer. So what we were going to review today is the potential scenario bullish setup that we were talking about yesterday on dollar-yen. Even though the market continued selling off, I stated last session that according to what you're seeing here, that's we just explained it in depth during some webinars. The weekly chart is showing us a channel up with a decent quality. That comes from 2010. So I've been commenting that the actual long-term view of the institutional investors and big guys is precisely that this should, or they expect this to continue moving up. Of course, we've been having a sell-off since, what date is this? Let me tell you. Since June 2015, we've had a pullback from the close to the 130 to close to the 100, and the market then stayed there for some months, and then skyrocket, and now it's making a pause. I've been commenting during the sessions here that I was expecting that the 1.12 should be good enough to support any kind of sell-off. That's exactly what happened yesterday. I was commenting that in any case, somebody is willing to hold a long trade on dollar yen, at least if you are really eyeing the 118 more or less that is here, you should be able to hold a stop loss below, well below the 112, at least the 111.50 or below. That's exactly what happened yesterday. So this is how it looks overall on the weekly. This is the latest price action of dollar yen. This is the daily chart. Great, I have this. Let me have another screenshot. The daily chart. So, by the way, I don't know if you've realized that I simply quit and stopped talking about geopolitics and Donald Trump, etc. In any case, that you have noticed that, it's not because I am lazy talking against this guy, but because it's the same old thing every time. So he hasn't been putting new information on the table lately. So yeah, it's like a useless game just to continue talking about the same things, the same appreciations that I have of this guy. If he's not giving more information to the markets. Yesterday happened something very interesting. And everything is related to yen. We're going to review that in some minutes. This is the daily chart. This is how this looked. Okay, I was commenting that all this zone, the 112 zone, as you can see here, has worked for all the month of February. And if you want to consider that this is a whole region, it comes from mid-January. Has been working very well to stop the bearish attempts. I was precisely commenting yesterday that any bullish expectations that you could have on yen should be sustained by this level. So at least the 111 or below should be the clear breakout zone, meaning that not because the market touches it, if it had touched it, that means that this will continue selling off. No, but at least this zone has been reporting very good support level. So this is what happened yesterday. This is completely related to what happened with Donald Trump's yesterday. I believe it was addressing the Congress. It's the first time since he became president. And you know all these institutional events that even all the Congress stood up and applaud him, etc. This theater that they like to do. In all democracies it happens. But it's sad to see that, at least in my side, that whom could be responsible of stopping some nonsense that this guy continues talking about was the Congress. And with this kind of things, it's kind of difficult to continue believing that the Congress should work as a counterweight. But we need to wait and see. He's facing a very tough administration because he has realized that things won't work just because he orders them to work. So he's like kind of stagnated, and yesterday's speech was not profound in any way. Was about, again, a lot of generalizations, a lot of populism, no hard data, no clear signals of what he was talking about to be the tax reform. That, by the way, he assumed the compromise 2 weeks ago that he was going to give in the tax reform. He hasn't talked about it. We have no real idea what he's talking about. He continues with the same propaganda of all the world has taken advantage of the United States, like if it was possible, like if it was even possible. But well, this guy stubbornly, this is like the sales speech. So, but he's not giving any further data on, for example, renegotiating the free trading agreement with Canada and Mexico. That is like if he wanted to deviate the attention from that hard topic that apparently was not that easy to fix as he thought, or as he sold to people that was going to be quick, easy, and fast, and good for the United States. And he's trying maybe to deviate the attention a little bit towards other issues, immigration, etc. Some things that I've been explaining here, that he doesn't need any more money to have some of his ideas to work, and I believe that he's just going to focus on that. And yeah, the market, it is said that after this speech, the dollar soared across the board due to the conciliatory message of this speech. I don't see any different speech like the one he has said during his presidential career. Actually, if you didn't know that he's already a president, maybe you could even consider that he's running for presidency. He's not still getting what is to address people like a president. He's still in campaign. So, what I believe that the markets read, according to the price action, is that this guy, that the more time it passes, the harder it will get to have hard solutions and hard approaches on any topic. It is well known by a lot of politicians that are, if you've studied a little bit of, how you say it in English, political science, of course, or even if you haven't, in high school or mid-high school, at times teachers tell you to read Machiavelli, The Prince. Okay, in that book that was written for an ancient non-democratic group of powerful people, Machiavelli was addressing to in the ancient Italy. I mean, ancient, not like before Christ, but after, of course. I don't remember the exact dates. I believe it's the 1300s or something. He stated that once you get into power, the bad things, the hard things, the really hard to digest things that you need to do, want to do, or will do, you need to do them at the very beginning of your administration. Altogether, with a huge smash, a huge hit, because that is the only way society, after a society can receive bad news, hard solution, harsh, tough decisions, let's put it that way, in the very beginning, in a very short term of time, maybe 2 or 3 months. But after that, if you simply lose a little bit the fear, the aggressiveness, if you want to say it, people will tend to forget what you did at the beginning. So it is well known in political science that the first 100 days of a president is what really makes the difference of his administration. The things that a president haven't been able to deliver, to implement, etc. during the first 100 days, it's going to be hell difficult to implement them after the 100 days. Because then the old-fashioned political forces will find a new equilibrium, a new settlement, and they will start generating more and more, in this case, for example, adversity against any policy that maybe they couldn't like from Donald Trump. This speech confirms to the market that he is in a stalemate. This is the reading I am giving to this speech, to this overall after watching the markets. The markets are considering that pretty much all the things are going to stay pretty much the same. including free trading agreement, no matter the sales pitch that he has, because he has realized that, in fact, it's like go and ask the UK how difficult it is to get out of a free trading agreement, a free trading zone, etc. Go ask them how difficult it is. And if something is mismanaged, the consequences could last decades. So it's not something that you will get done in the first 100 days. So yeah, after seeing this, I believe that the market just realized that this is a clown. This is only a person saying things, non-conventional things that he has no real good idea how to put them to work. There are some other things that were easier that he has done that actually enhances businesses with a hard quota of maybe environmental damage. But at least for the business side, the markets are really calm. They got really stressed about his approach on free trade, but he now changed the speech. He said, I am very pro-free trade, but then he victimizes the United States and victimizes himself, like if the United States wasn't the very first pushing everybody to accept the free trading agreements. And now it happens that the whole world benefited and took advantage of the United States. That's silly. That's stupid. But well, this is what caused the massive rally, 100 pip rally in yen before closing the day. Okay, this is the 4-hour chart. I was commenting that the webinar was here, more or less, if I'm not wrong. Yeah. And I was commenting that, in my view, this was heading north. But we could have even a heavy jump from the 112. So the stop loss should be at least below 111.50, at least. Then this is what happened. It continued moving down. It retested here, and boom. The short traders, I was commenting that the stop loss of a short trader should be here, because the webinar was here, what's happening here. I was saying, if you're really wanting to short this, either two scenarios could happen. If you shorted this and got out of the 112, that was a good short. But if you were betting that the sell-off could continue below the 112, and for some reason you overlooked this, you should, at least your stop loss should have been here. I commented that yesterday. And well, this candle gives you the reason that exactly at this point there was a very significant demand line. So I don't know if you decided to take a chance on dollar yen yesterday with the information I delivered. This is the 1-hour chart. At the time of the webinar, we were having, I believe it was here, we have had this sell-off at that moment. We were analyzing the 1-minute chart, the 5-minute chart, and I was finding, and I'm going to put back that chart, that there was a strange anomaly that is not seen every day in the dollar yen. Oops. That it's not seen every day in the dollar yen. Okay. That it was that the lower it got, the higher the volume it got. So I was explaining yesterday that that divergence usually means that somebody is very interested in buying every dip. And I commented yesterday that the ones that were most likely doing that were the monthly and the weekly traders, meaning investment banks, hedge funds, etc. Big guys, very well informed guys that have tons of tools at their disposal, and that they are not in a rush of closing a trade hovering in losses in the next week. So I said, You should be very careful with that in any case that you're shorting this, because it can jump in any. I even commented that it could even not get to the 112. It could jump 10 pips above 112 and then make a wild jump. I said that yesterday. Well, the wild jump indeed happened, as you can see. But in this case, yes, it got to the 111.80, a little bit lower. But the thing is that this is again, trading is about the same old topics, the same boring things over and over again. And even though there are quite a few things that you should focus on, it's very typical that we commit mistake after mistake every time, and over again. Why? Because it's very difficult to keep our head cool when the market is going against us. And it's even harder to keep our mind cool when the market is going in the way we predicted. Emotions are basically the things that sabotage our trading performance. And you wouldn't let me lie. If you open, for example, a long trade here, this was my case, guys, in a live account. But what was the difference? I was eyeing the 118, that it's far above these levels, and my stop loss was kinda here. So yeah, I knew that this could happen. But when you have a long trade, overall, when you are over leveraged and you're seeing this and this and this and this, it's very difficult that you keep calm, that you keep your ideas straightforward with a cool mind, a cool head. It's very difficult. So at this time, I can bet you, and overall, when the market touched the 112, maybe you could have said, oh yeah, finally we got to a psychological level, then the market will move in my favor. And you just continued seeing this selling off and selling off, getting close to the 111.60, and at just at this zone, your emotions are about, or if not completely out of your control. And here is when we start committing a lot of mistakes. A way to manage that is, of course, practice, but there are some objective ways. You need to give context to what you're doing. If you're trading a weekly chart, like I was explaining yesterday, it was clear the stop loss should be below the 112. Automatically, that should mean that if you go long, targeting the 118, for some reason you decided to go long, maybe you just simply didn't want to wait anymore. You should picture yourself, before picturing, are you buying something new stuff with the money you win? You need to firstly picture yourself at the most ultimate detail. Picture yourself like if you had a mirror of a camera, knowing how you should look like if the market goes against you up to the 112. You need to picture that in your head. You know? Okay, if this trade goes against me 50 pip, will I there to respect my plan? Will I there to respect my direction, my stop loss, my overall plan based on a weekly? If you honestly can picture yourself managing a trade based on weeklies, respecting your decision, your direction, your stop loss, and your objective, your take profit target, then you can proceed opening that trade. When you take the weekly as a reference, you know that these things happen. And this was actually very good because it dipped and immediately shoot up. But usually it dips and it hovers here for quite a few days, and then maybe it goes back down and then start moving up. etc. It takes way more time usually for this kind of trades. I mean, if you're opening a 112.50 and you're targeting the 118, you're targeting more than 500 pip of profit. You should at least be willing to give some patient tolerance, room of error, etc. Watching, I was commenting, and I'm going to switch to the 1 minute chart. Good morning, Nehat. How are you doing? Okay, so, well, this actually continued doing what I said it was a potential scenario. That at this zone, it was tough for the ones shorting because it could be shy of the 112 and then moving back up quickly. In fact, it happened, but it ended up going below the 112. Why I was feeling this? First of all, the price action in the 4-hour and the weekly that I explained yesterday was telling me that this was targeting north. Maybe I am not necessarily I cherry-picked the best and the bottom of the movement, but the overall direction was correct, at least so far. Okay, so you have the only way to cope with the stress of having a floating loss of a trade going against you is having the clear of mind that what you're doing. And the best thing is just to go to higher time frames, to adapt your stop losses to those high time frames, and then try to trade a potential move that makes sense. If you're a super trader, you can scalp, you can trade a 1 minute chart, you can open 1 minute binary options, whatever, but that comes to the end. First of all, is need to a way to circumvent volatility. And of course, this is not only a bunch of goodwill wishes. No. Where was it? Let me find yesterday's webinar time. Okay, yesterday's webinar time was this. Let me have another snapshot. This is the one. This was before. By the way, Nehat, you're from Armenia, right? I found you, I believe, in the trader contest today, and I saw that you are from Armenia, right? So, this is what happened just before the webinar. We started the webinar here at 7 a.m. GMT time. Okay. I explained yesterday that we have a straight 45-degree movement to the downside. Okay, do you remember? But I also said that something very interesting happened. The lower it got, the higher the volume. This caught my attention. This is not typical. When you find that, usually happens when somebody is willing to provide bids or demand on every people wanting to sell or to short. So the lower it got, somebody was very interested in buying. I said that yesterday. I said the most likely thing, I don't know if I'm going to be right or wrong, I said yesterday. The most likely thing is that that if my trade is wrong, until tomorrow or even later, I will have the information to more or less understand what happened. But in any case, I am right. This is going to be one of the clear signals of why I was right. this very top at the 112.70, the sell-off started and the volume started picking up. Then we had the webinar started at here, 7. Okay, it continued moving down and stabilizing a little bit here in a kind of a rectangle. As you can see, the volumes don't look in that ascending way because the market didn't continue selling off. But I wanted to check this out. This sudden drop during this happened during the webinar hours. Look at this huge spike. Look where it happened. It happened at 112, let's say 35, 112.35. And very close to 135, we have again this movement to downside. You remember that I drawed yesterday an imaginary mid pseudo line in a descending channel we have. Okay. The market ended up respecting that and selling. But the thing is, yes, we had a big sell-off here again. But again, it spiked a lot of volume. Let's check this one. This one was the highest spike of volume, and it happened more or less at the 112.35. Okay? Let me have another. Wait a second. Because I can't find my screen sharing stuff, it's just hidden behind my. Wait a second. Now, I will have to launch it again, I guess. Okay, let me launch another screen sharing. Here it is, okay. So this is what happened afterwards. I'm going to shrink a little bit the price action. Here it is. So focus on the 111.35 here. That is more or less where these two breakdowns happen. 112.35, just as a reference. This was this last sell-off. It continued moving, okay, down and down. And here again, this pattern showed up. The lower it got, the higher the volume here from this very one. You remember more or less? The 112.35, this zone. From this zone, it started selling off and the volume started moving up, well up to here. But then something happened. We had this, a very typical bull capitulation move that usually is the latest. This is where we got almost to the 111.70. Just retesting this low. And the market started moving up. The speech happened at 9 p.m. American time, I believe, or 3 p.m. I don't remember. Well, but the thing is that a market retested the 112 zone here. So here we started having moving to the upside. I don't like the low volume here. Look at this. More or less here. Very close to the 112.35 zone where the other sell-off happened. It's not coincidence that here, of course, this volume was the one here. Why? The market, when it got here, it decided to spike up the volume to the very 112.35, 112.30, 112.40 that we just talked about. Look at this. Here you can see it clearly. This is the second highest liquid volume movement to the downside, and it's here. If you compare the volume here and here, we have this ascending volume, then the volume getting lower and spike here. This doesn't mean that this is a standardized way to trade, but at times I've seen this happening. That is why I told you yesterday, when you go to a chart, overall the very low time frames, I mean, we are seeing this increase the volume as low as the lower it gets, the higher the volume in the 1 minute chart. It's very strange to see that in yen lately. It has been very weird. So that gave me the idea something is buying. And then again, after 11 a.m. GMT time, we had the very same thing happening. We retested the no-brainer support zone for bulls. And I don't know who was buying here from the top, the 112.67 up to the 112, but somebody was buying heavily. And then the market reset itself when it got to the 112.35. And you can see how the volume spiked here. This is not coincidence. This I need to be honest with you. There are a lot of things that happen in the market that after 11 years, I have no idea why they happen. But I stopped worrying about why they happen, and instead of that, focusing when they happen to profit from it. Yesterday, again, I said, with the closer we get to the 112, if it continues going down, we can have a very quick movement to the upside. Why? Because of that 1 minute price action to the downside and volumes increasing, that it repeated itself here. Let's see what happened afterwards. This is the spike I just showed you, 112.35. Right? You remember the first sell-off after having that first sell-off volume spiking. After that continued movement to the downside with rising volumes. Well, what happened after it got to that price exactly? The market stabilized and boom, continued moving up. And look at the volume. Here it varied, but here look at the volumes. It dipped here, and it did the same thing. It moved downwards, spiking up volume, and then the movement continued to the upside. At times, this doesn't happen this way. I need to be honest. This is something that I have developed, a feeling. That is why I commented that yesterday. It was suspicious for me since yesterday, since the sell-off started, that it happened on increasing volumes. I was feeling that this could happen. Of course, in trading, there's nothing for sure. But you saw that happening twice before it got to the 112. Then spiking up here at the, let's say, reference breakout level to the downside. At least this was my reference breakout level to the downside, 112.35. And then it boom again. It sold off after retesting the psychological 113. It got to the 113.30. It sold off. I believe that here we had, I don't know, maybe Donald Trump, etc. I really don't know at what time this happened. But look, the volume here. So before this, we had 2 times the market moving down, increasing volumes, and then eventually soaring up. This is what happened. We got to the 113.60, more or less we're here now. Let me show you exactly where we're standing on. We got to the heights, and we're stabilizing here. What I expect here is at least a pullback. I really don't know up to where, but I truly believe that, of course, yesterday I said my expectations for dollar-yen. Okay, thank you very much, Catherine. You read my mind. Thanks. I have some comments. I haven't seen them. Gas 22, good morning. With which position you have open at the moment? And now I short trading yen. Very small trade to I don't know, maybe below this level, and a very tight stop loss to the upside. That is my trade now, but that is in separate account. My bullish trade targeting the 118 is open. I haven't made any switches in the stop loss. It is still below the more or less at the 111.40. Maybe I will do some maneuvering with the stop losses next in maybe tomorrow or something. But that is my main trade. I mean, this trade maybe would last like what? 1 month? I don't know, 2 months, whatever. After the market behavior here, if yesterday I have my insights, now I am more than convinced of them. It depends on what happens afterwards. Here it says, good morning, what pair are we talking about? Guess 21, this is the dollar yen. And guess 22, good morning. Hi. Hello, David, how are you doing? Good morning. Well, good evening. No, good night. Thanks for dropping by. So, well, no, you don't have to be anything to be sorry, my friend. No, it's a pleasure to have you here. Thanks for coming by. So, well, why this all comments? I'm going to just have a bird's view on an hourly chart here. You can see here the magnitude of the movement. Again, this is dollar yen. This is the 1 hour. We have had this sell-off since the 114 from January. No, yeah, it is January 15 more or less. The market sold off and sold off. But again, look in the 1 hour chart where we started having volume increasing. You could even draw a line here, even from here. So the buying zone was from the 113, even from the 113. There was somebody trying to anticipate this. I mean, the Japanese economy is a mess. They've been experimenting, like the things that Donald Trump wants to do to the American economy, trying to fix something that actually is not broken. But in the Japanese economy, it is broken. But the thing is that they are trying to experiment with things that are not working at all. So there is a no-brainer direction towards yen. And besides, apparently, the American economy will continue more or less the same as it is now. So that is boosting confidence to buy this. That is why we have an ascending channel since 2010 in the weekly chart. Why I told you this? Why? Because maybe you are saying, well, why this guy is reviewing things that are not useful anymore today? Well, because yesterday things in trading, you won't have any way to make something in trading useful until it is already profitable. You need to take the risk of something that maybe you don't have an idea if it's useful or not. You need to speculate. But it is said that trading is educated guessing. Grabbing the most information you can. Analyzing them in the most creative way you can. With approved intuition, and you will have 50% of chances of success. That's what it takes. You have to give your soul, your life, your time, your mind, everything of you, and at the most you will have 55% of chances to win. But if you don't do it, if you hesitate a little bit, you won't get to the 45, 40, 35%. This is a high performance activity. If Usain Bolt stopped training 1 month, Of course, he will lose maybe the top of the second best or the third best could win him in a competition. Of course, he needs never stop training, and he needs to always being able to give the best of him, always, every time. It's like this guy, this swimming. I forgot the name. This American guy, David House. The swimmer, the super gold medalist. I just forgot his name, for Christ's sake. It is well, this super winner of in swimming pools. I forgot his name. It's super popular. Okay, when he stopped training, he lost a little bit of the mojo. In trading, you need to be always being willing to grasp the tiniest, the smallest meaning of maybe the most hidden information in trading. When I started seeing the 1 minute chart with the volumes there, that gave me a signal. Something is happening. Somebody's doing something that we don't know. We don't know why. The thing's trying to grab those clues. When you put everything in context, and I said yesterday, you come to trading already biased. You won't allow technicals, fundamentals, whatever, to shape you when you are trading. You need to come with a plan. And then you will start gathering all the pieces that will work and discard the ones that won't. When you have more than acceptable evidence that maybe your insight is right, then you go for the trade. Here, what saved me of maybe panicking, that my plan was based on a weekly chart, on an overall fundamental long-term trend, that I've been watching the 112 being retested for quite, I don't know how many weeks. So that is why context is what gives you a leverage, an edge. Context is part of your edge. And at times when we start trading, we overlook that. We think that actually you can switch charts randomly from the 1 to the 5 to the 10 and try to find or grab something. No, that's not the way it works. You try to find a compass. Imagine that you're in a forest, lost in a forest, and you have a compass in your hand. Maybe you have no idea what's next, if you're going to find a lake, a river, a mountain, etc. But at least you know where north is. And maybe you know that you need to move west. You will start moving west. Of course, you will have to improvise a lot. But at least this is what happened for me yesterday. Even having this very scary, because at one time it got really scary, this sell-off. But I said, okay, my compass is still to the west. Until I have no further evidence, I won't change it. And there's a difference between basing your decision on objective data and pure pride. When you're arrogant and you simply won't accept a mistake, you're doomed in trading. And that's another delicate area. It's very difficult to know when you are really defending a position based on reality checks than defending a position just on wishful thinking. It's difficult, but it's just a matter of trying and trying until you develop the skill. It's not an easy one. So again, the weekly chart, that ascending channel or broadening channel, I don't remember exact figure, plus being watching the yen for quite a long time and seeing that the 112 zone has worked very nicely to stop the movement. All the nonsense, the panic of post-Trump fading a little bit away. Trump changing a little bit the speech and maybe losing the steam Okay, I said, okay, it's a no-brainer. Buy dollar against yen. It's a no-brainer. Okay, so since mid-January, it started moving down. Even in the 1 hour, we see this increasing volumes while it got lower and lower and lower. Here is where my trade more or less was open. More or less here. This is the 112.35 reference level, more or less. Here it is. We went down more than 100% of this sell-off, and then boom, we're standing here now. So I would like to tell you that this is easy to catch, but when you have a lot of pairs watching and a lot of noise, a lot of volatility, a lot of fear, a lot of bad data in the news, it's very difficult to know when the 1 minute trend could mean something, you know, because at the end, from here to here, from here to here, and from here to here, the 1 minute trend was the one giving clues that somebody was buying heavily. Usually you go to the higher time frames, and even in the higher time frames, you found out that the trend was up. But you need to see all the charts, not trying to catch the quick buck opportunity. Because if you are looking for the quick buck opportunity, you're losing this kind of opportunity and overall this kind of knowledge. You know why? Because after this price action, I will remember this sell-off the rest of this year, you know. Because during this sell-off, it was so clear that somebody was buying heavily. And this zone will remain a super reference in the future. Only by that price action verified in the 1 minute chart. It was the clearest chart you can see this. So 1 month, 2 months, 3 months, not only the region of the 112 will continue being important, but this specifically is like, imagine that here is like if you built a super concrete support here from the 112.70 to the 111.80. Here is a super concrete support that started here. So we are still in support. If we put this in context, in the weekly context, in the hourly context, in the 4-hour context, we are still in the support zone. But inside this support zone, this is super strong. Okay? Create yourself the habit of trying to find these kind of things. It takes a lot of time because it's much more attractive to maybe having shorted this. Of course, it would have been hell attractive, 50 pip in less than half hour. But if you got greedy, you would have been stopped out already or even margin called. These kind of opportunities happen few times during a year. This is why it's important. What I am surprised is that these kind of opportunities are shown clearly like an X-ray super clear in the 1 minute chart. This is very strange. Super strange. Usually you see this kind of stuff in higher time frames, etc. Okay. So this, when you see these opportunities arising, is because they are building up something important in the future. This is why I open here a trade looking for the 118. I am way more now in profit than how much I was in a loss at some moment. With the huge advantage that I can close half of the trade now, put the rest at break even and let it flow to the 118. And we are in the 113. 500 more pips. And the only thing that you need to do is to watch and to look for these very unique opportunities. These very unique opportunities leave fingerprints. At times they are very difficult to see. At times usually are in the higher time frames. But this was unique. So as I believe that this specific kind of opportunity is the first time I explain it in depth during my webinar. The opportunity already passed. I said yesterday that there was room for shorts, being careful close to the 112, but that the longer, more appetizing opportunity was to the upside. Everything aligned from where? Well, from it has a lot of days doing this, trying to build a support. When you go to the news and you're familiar with the news, with the for example, in this case, you have dollar going down since mid-January, and going down and going down and going down, even after having very good American data. Sounds odd, right? When you go to the news and you see that the Japanese economy is running out of tools to revive or to at least to avoid its economy to collapse, and you see yen strengthening, it's okay. Yen is a safe haven. Yen has an extra value of reserve currency, etc. It's complicated the way the currency world works. But the yen has that extra appeal. But it comes a time when reality simply imposes. There is simply no way that people continue buying yen. And I mean the long term. The next safe haven is the dollar. And the dollar has been doing as a safe haven since 2008. I don't know how the Japanese economy will do. I guess the last time I talked about it was like 3 or 4 months ago. It's simply no way out. So at times when you see, okay, the market is completely doing the complete opposite, it comes a time when the market wakes up and says, you know what? That's it. Let's buy dollar, let's sell yen. What has been happening, at least judging from the 1 hour chart, since February 21st, the lower it got, the higher volume we got. So somebody at least was starting buying here from the 113. So imagine there were maybe institutional guys, hedge funds buying in these areas, and they are not a break even, because what they do is they do something that is called parabolic trading. When you do parabolic trading, is like opening exponentially higher lots, and the lower it gets. For example, if you open 1 lot here, maybe you open 2 here, you open 4 here, you open 8 here, and your break-even point, of course, is not here, it's kind of here. But you started buying here, so they are break-even. So that is why here I expect a movement to the downside as a precautionary take-profit target. Okay, try to you won't find this opportunity. Maybe if we find another or 2 more during this year, more or less this kind of opportunities is way too much. It's way too much. But when you find them is when you open long-term trades. Because the potential, and to close the webinar, I'm not saying that this will happen, but according to the current state of things, I would say that it's like a no-brainer. This is again the weekly chart. It's like a no-brainer that dollar will continue moving up to where we don't know. Why not live here? I mean, we have a chartist pattern from 2010, or at least here, the 125, 127, the 130. Imagine that maybe in 1 year, we continue talking about this trade. Do you remember that trade that I opened in the 120 or etc.? Imagine it going here. I took profit at the 118. Maybe I just let the other a small part. Imagine one mini lot, 110,000, being able to leave it run here from here to the 130. It's the equivalent of what? Of $15. How much is that? Like $1,000. No more. I just lost count. It's the 113. Let's say the 114. Let's say the 130. That is the next psychological level. Well, it's a lot of money. I just sometimes I just get saturated here. So yeah, this is when you open this, and these are the trades that when you are lucky, they could even last years. Because if this moves up and continues moving up, and eventually the Japanese economy simply starts trembling and falling apart, the next stage is the 140. And maybe that will happen in 2 years, 3 years. But you open a trade 3 years ago, that is what is called investment. You do a job, well done, super extra well done, once, and you receive the success for the years to come. This is investment. It's very difficult that a retail trader is interested in this. But according to this opportunity, maybe this is one of them. Okay, so inside all your intraday trading habits, etc., try to look for this, because maybe you will get lucky. One in a year. You don't need more. You need one of these kind of trades a year. During 5 years, after 5 years, you will have, with one single trade open, a lot of money there. Just because you have the intelligence to see and to read the fingerprints of the market. That when they happen, they happen and they can evaporate quickly. But if you are able to see them, you can enter in a very good trade. Conclusion, I am looking for the 118. There, maybe I will close, I don't know if my whole position or half of it or something. Maybe the next step, take profit target to 112, 120. And in any case, it continues moving. The next 130, 140. Of course, I'm talking about the next 2 to 3 years. But who cares? It's something that won't take effort out of me. The decision, I took it yesterday. Okay. I have some comments here. Well, Racer X is kissing Katarina while sending her a kiss in the chat box. Nehat just said $, but I don't know what he means. But what do you mean, Nehat? The $? Okay, let me start closing all this. So, well, this is a very strange review. We won't have a lot of chances to review this sort of this kind of trades during our lifetime, because this happened very few times. But when they happen, they are very profitable. When they end up being profitable, of course. Usually when you open this kind of trade, the first thing that will happen is that you can face this kind of drawdowns against you at the very beginning. That's normal, because when you put things in context, again, that magic word context, if you're hoping a 500 pip move, it's even a small drawdown of 50 pip. It's a tenth of your targeted area. So yeah, but at times our mind, our emotions. That is why opening this kind of trades, you need to be very aware of your leverage, of if you have margin reductions during weekends, for example, with Dukascopy. What else? If you have more exposure on other trades, when you open other trades, that you by default respect the margin of open trades. Never ever play with the profits of that trade, meaning that if it's 300 pip in your favor, and then you say, oh, I have this much more profit in my accounts, floating winnings, so I will use more, I will open bigger lots. No. The most recommendable thing is only when you have closed profits is that you use them. Because if you miscalculate something and if your positive position loses half of its shine, you can face a lot of problems with your newly open trades. And trust me, you don't want to have margin calls. When you have this kind of trades open in profit, you don't want to have a margin call. Because that means that all your profits and even more are lost. These are called head trades, more investment type. The fewer trades you will open during your life of this style, yes, but don't deny yourself this opportunity, because opening a trade, closing a trade with 500, 600, 700 pip of profit is something that feels really nice. Okay, so I would like to thank everybody for showing up. RacerX David, my friend, for coming. I know that it's very early for you, so I hope that you have a nice and restoring sleep. Spanish, thanks for dropping by. Rocas, all the guests, Nehat, thanks for showing up. And I expect, by the way, this month is going to be massive for me in the contest arena. I just opened again the trader contest. I am playing the strategy contest. I am playing the social contest. Everything I'm going to play it this month. So hopefully I want to have a margin call like the one I had in the beginning of February. And I hope that at least I will make it to the paid positions in the trader contest. So I will be explaining here the logic of my trades, when I open them, when I close them. If I fail, you will see the result here. If I win, you will see the results here. So make a space in your agenda to come here often and to check it out. Thanks, Alberto, Jesus Christ. Thanks for your time, Richfex, Rocas. Thanks. Thank you, everybody. And remember that this is Alberto Alvarado. Remember to trade safe. That this is my free YouTube channel. Remember to be safe. See you all tomorrow, and bye-bye.